Good morning, students. In process costing, today we are going to prepare abnormal gain, one process method. Illustration sum number 12. 100 units are introduced into process 1 at a cost of rupees 9,600 and an expenditure of rupees 4,800 is incurred. From past experiences, it is ascertained that wastage normally arises to the extent of 15% of the unit introduced. This wastage is having a scrap value of rupees 10 per unit. The actual output of a process 1 is 90 units transferred to process 2. Prepare process 1 account, abnormal gain account and abnormal loss account. So from the given data, we need to prepare 3 accounts. What are the process 1 account, abnormal gain account and normal loss account? Let's prepare the first account, that is the process 1 account. Listen, look at the question. 100 units are introduced into process 1. So how much unit are introduced here? Clearly 100 units. Okay. So unit introduced is to be entered on. Introduced unit is to be entered on debtor side in unit column. Its value is cost of the unit is 9,600. So the 9,600, the cost of the unit is entered here, and it has a process 1 has the additional, that means other expenditure. Its value is 4,800. So that's also entered on debtor side, because all the expenses related to input units related to process 1 is entered on debtor side. Okay, so all the expenditure entered and input units also entered. Okay, let's come to question. What they given? Listen, look at here. 15% normal loss and the output values, actual output is 90 units is given. It is transferred to process 2 account and the scrap value 10 rupees given. Okay, so now we have the calculation through working note. Okay, to find out abnormal gain. Okay, abnormal gain unit. Okay, listen. So how much input unit we have? Input unit is 100 units entered. How much normal loss we have? Normal loss 15% we have. Okay, so that 15%, whatever percentage normal loss we have, it is to be calculated with the input unit. Okay, what they given. So that here the normal loss 15% is to be calculated with the input unit 100 units. You will get the normal loss is 15 units. Okay, because the 100 units is multiplied with the 15%. Okay, you will get the normal loss is 15 units. Okay, listen, the normal loss means deducted minus. Okay, so that normal loss unit is subtracted from the input unit. Okay, so accordingly the normal loss 15 units is to be subtracted from the input unit. You will get 85 units, that is called normal output. Okay, so we get the 85 units normal output after deducted the normal loss 15%, that means 15 units deducted from the input unit. You will get the result is normal output 85 units. Okay, then listen, how much actual output we have? We have in the question the actual output is 90 units. Okay, that the actual output always calculated with the normal output. Okay, listen, accordingly here we subtracted actual output and the normal output. What is the difference between actual output and normal output? 5 units. Okay, listen, we have the format to find out. Listen, look at here, that 85 units can't subtracted with the 90. 90 units cannot be minus with the 85, right? So we have minus 5 units. Okay, that minus 5 units is called this what? Whether it is a abnormal gain or abnormal loss, we have a format to find out whether it is a abnormal gain or loss. Okay, so listen, look at here, normal output is lesser than that of the actual output, then it is called as abnormal gain. Accordingly, the normal output we have 85 units. Okay, actual output given in the question 90 units. Okay, so the normal output is lesser than that of the actual output, right? So As per that format, if you have the normal output is lesser than that of the actual output, you will get abnormal gain 5. Abnormal gain. Here we have the abnormal gain is 5 units. Okay. So now we are after calculation, we are going to enter into process 1 account. That means normal loss 15 units and actual output given in the question 90 units. Now we find out the abnormal gain through this calculation 5 units. Okay, come to process 1 account. Okay, so accordingly normal loss, always listen, normal losses and the actual output and the abnormal losses enter on filter side of the process account. Okay, so accordingly as per the format, we enter normal loss 15 units. Okay, calculated with the 15%, calculated with the 100 units, we get 15 units of normal loss. Okay, and then they have given the question output, actual output 90 units. It is to be transferred to process 2 account. They have clearly given in the question that the actual output to process 190 unit is transferred to process 2 account. So as per that question, we enter against this 90 unit output, actual output, they are going to write by process 2 account, because the whatever output we have from the process, it is to be transferred to the next process. Okay, as per that we enter. Listen, abnormal gain, how much we have? 5 units. It is to be enter on debtor side. Okay, so 5 units enter on debtor side. Now we are going to find out abnormal gains value. Okay, how can you find out the abnormal gains value? Before we are going to find out whatever abnormal gains value or output value, okay, you need to find out the cost per unit. Okay, if you find out the cost per unit only, you can find out the abnormal gains value and actual output value. Okay, so for that we are going to find out the cost per unit. Okay, we have the format to find out the cost per unit. How can you find out the cost per unit? It's very simple. The cost per unit formula is the normal cost of the normal output divided by normal output. What is meant by normal cost of the normal output? Listen, the normal cost of the normal output means the expenditure of the process minus the scrap value of the normal loss. Okay, got it? Normal loss of the normal output means they have clearly given the clarity. It means normal loss of the normal output means the expenditure of the process minus scrap value of the normal loss. Okay, how much expenditure of the process we have? Come to this process 1. The expenditure of the process 1 we have 9,600 plus 4,800. Okay, other expense, these two expenditure added together, how much you have the total expenditure of the process 1? 14,400. Okay, so the expenditure of the process we have 14,400 minus scrap value of the normal loss. How much is scrap value of the normal loss? We have the scrap value of the normal loss we have 150 rupees. Okay, so we entered the scrap value of the, as per the format, the scrap value of the normal loss is 150 rupees entered. Now it is to be deducted. 14,400 minus 150, you will get 14,250. Okay, so we find out the value of normal cost of the normal output. We got 14,250. Normal loss, cost of the normal loss means expenditure of the process minus scrap value of the normal loss. So expenditure of the process minus scrap value of the normal loss, finally we got 14,250. That is called normal cost of the normal output is 14,250. Okay, then now we are going to find out divided by normal output. How much normal output we have? Look at the working note. The normal output we have 85 units. Got it? So normal output is 85 units. Now we are going to divide it 14,250 divided by 85. That means normal cost of the normal output divided by normal output. Okay, so now we are substituting 14,250 divided by 85 units normal output, you will get the cost per unit is, you will get the cost per unit is 167 rupees 647 paise. Okay, how much cost per unit? You find out the cost per unit value is 167 rupees 647 paise. Okay, now it is to be entered on process 1 account. Listen. So the cost per unit value is 167 rupees 647. Both the side you are going to enter, because we have the actual output and we have the abnormal gain on both the sides. So for that you are going to enter on both the side cost per unit. Listen, look at here. The cost per unit is 167 rupees and something paise. Okay, how much for 5 units? So for that you are going to multiply the cost per unit and abnormal gains unit. So the abnormal gain is 5 unit. The cost per unit is 167 rupees 647 paise. Okay, now we are going to multiply the abnormal gain 5 units with the cost per unit. You will get the abnormal gain value is 838 rupees. So it is to be entered on process 1 account. Abnormal gain value is 838 rupees. Similarly, you are going to find out the value of actual output. Okay, so the cost per unit, you know, 167 rupees 647 paise. It is to be multiplied with 90 units. You will get the value of output is 15,088 rupees. Are you clear? Okay, now we are going to add debtor side of the, that means all the cost what we have on debtor side. You will get the total 15,238. Okay, similarly the in unit column, debtor side unit 105 units entered. Creditor side column, we find out the total 15 plus 90 units. You will get 105 units, and the scrap value and the actual output value add together, you will get 15,238 rupees. Okay, so process 1 prepared. Now we are going to prepare the separate account for abnormal gain account. Okay, so before you are going to prepare the abnormal gain account, where is abnormal gain account is located on process 1 account? Abnormal gain account 5 units and 835 rupees. That means the value is located on debtor side of the process 1 account. Okay, now it is to be transferred to creditor side of the abnormal gain account. Okay, so as per that format, now we are preparing the abnormal gain account separately. It is to be transferred from the process 1 account. So for that you are going to write by process account, process 1 account. Okay, that value 5 units and 838 rupees is entered. Okay, so look at here, abnormal gain is 5 units valued at the cost of 830 rupees. Okay, even though normal loss happened, right? So how much normal loss happened? Okay, even though normal loss is happened, so for that 5 units is calculated with a normal loss, calculated with the scrap value of 10 rupees. Okay, you will get 50 rupees. Okay, now it is to be balanced. How can you balance the total subtracted with 50 rupees of scrap value of normal loss? You will get the balancing figure is 788 rupees. Then the rest of the balancing figure 788 rupees is transferred to the costing of a P&L account. Okay, it is to be transferred to costing of P&L account. Okay, we are going to prepare normal loss account. Look at the question, where is normal? Before we are going to prepare the normal loss account, where is normal loss is located on process 1 account? It is located on creditor side of the process account. Process 1 account, its unit is 15 units and the scrap value of normal loss is 150 rupees. Okay, now it is transferred to process 1 account and enter it on normal loss account on debtor side. It is transferred from creditor side of the process account and it is to be entered on debtor side of the normal loss account 15 units and 150 rupees. Okay, normal loss is 15 units and the scrap value of normal loss is 150 rupees. It transfer from the credit side of the process one account and enter it on debit side of the normal loss account, right? But since there was an abnormal gain, okay, right? So the abnormal gain, how much unit? We have 5 units. So that abnormal gain 5 units is calculated with the selling of scrap value 10 rupees. You will get the abnormal gain value is 50 rupees. Okay, entered. Then rest of the 10 units we have, right? The normal loss 5 units is goes to abnormal gain. Okay, actually we have the abnormal gain. Even though we have the normal loss, we have the abnormal gain 5 units. That 5 units is calculated with the scrap value of 10 rupees. You will get the cash. You receive the cash through scrap value 50 rupees. Okay, then and rest of the 10 rupees, okay, balancing unit of 10 rupees, 10 units is to be again selling through scrap value rupees 10, scrap value of sales rupees 10 for cost per scrap value 10, how much for 10 units, 10 into 10 units you will get 100 rupees, okay. So that when you selling through the scrap value for 10 units, you will receive the cash 100 rupees. That cash 100 rupees is to be entered by cash account. Okay. So normal loss account is prepared. Both the side are tallied. Okay. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.